Hello friends, I am Dr. Shailaja Parmar. I welcome you all at e-learning platform of Kadi Vishwavidyalaya. Today we are going to discuss question number 4 from the chapter Valuation of Goodwill and the subject Corporate Accounting 3. The question is already there with you all. Let us start with, which particular method we are going to start with over here? We are going to start with the super profit method. Valuation of goodwill. So there are total 5 steps when we talk about the valuation of goodwill, that too by super profit method. Step number 1, capital employed. Step number 2, expected profit. Number 3, average profit. Number 4, super profit. And number 5, finally, calculation of the goodwill. Let us start with the step number 1, that is capital employed. How will you calculate capital employed? The formula is total assets minus total liabilities. Okay. Let us go ahead with the total assets. To find out the total assets, we have to take into consideration our asset side from the balance sheet. We will start all the assets from the very beginning. The very first asset which is given to us is the goodwill. Here we are calculating the goodwill, and that is why the goodwill which is there in your balance sheet will not be considered again. The next asset over here is land and building. Instruction number 1 says that the market value of land and building is twice the book value. Now, if you can check out in your question, asset side land and building are of 6 lakhs, twice the cost. So 6 lakhs into 2, land and building you are getting at rupees 12 lakhs. The next asset you have been given is plant and machinery. It has been informed to you that the depreciation on plant and machinery is 20%. So the plant and machinery cost of plant and machinery is 8 lakhs into 20% depreciation. If you can calculate, you will get the depreciation of 1,60,000. So 8 lakhs minus 1,60,000 after depreciation, the value of a plant and machinery is 6,40,000. The next thing which is there in your balance sheet is the 10% government securities which are being done for the purpose of provident fund. Because it is the investment which is related to your business, this investment will be forming the part of our calculation. So 1,50,000 we have written over here. Next you have 15% debentures of Bansi Limited, face value rupees 1 lakh. This is the investment done by the company for the non-trading purpose, and that is why we will not consider this for the calculation of capital employed. After that you have the stock. It has been instructed to you in information number 3 that the stock includes certain items which are useless, costing rupees 40,000, having no scrap value. Okay, so the stock which is there having no scrap value will not form the part of total assets over here. So that is why 3 lakhs minus 40,000, how much you are getting? 2,60,000. Next you have the debtors. Again, in the instruction number 4 you have been given an information that all debtors are good. Now check out your balance sheet asset side. Debtors rupees 1,80,000 and bad debt reserves are given rupees 10,000. But it has been given to us, instructed to us that all debtors are good, and that is why we will take entire debtors of rupees 1,80,000. The next asset we have is cash and bank rupees 80,000. Then prepaid expenses rupees 30,000, and last you have the preliminary expenses, because it is the fictitious asset, it will not form the part of total assets over here. Now if you can take the total of all the assets over here, you will get total assets 25,40,000, to which we name A. Now let us start with total liabilities. For the calculation of total liabilities, we will take into hand our liability side from our balance sheet. We will start from the bottom. The very first item from the bottom is a proposed dividend on preference and equity shareholders. Okay, so paying the equity shareholders a dividend, it would be completely discretionary after making the payment to all the obligations, but it is very much obligatory on the part of company to make the payment of preference dividend, and that is why it is the liability of the company. So the preference dividend, proposed dividend, we will take into consideration 36,000. Next you have the provident fund, which is again the liability of a company, 1,50,000. Then we have creditors of rupees 1,70,000. Workmen profit sharing fund, you have 40,000, and 10% debentures of rupees 2 lakhs. If you can get the total of this, you will get the total of total liabilities 5,96,000. Now you have total assets and the total liabilities. A minus B, you will get a net asset of rupees 19,44,000. Now, apart from that, if you can have a look at your balance sheet properly, liability side, you will find that 12% preference share capital of rupees 3 lakhs is there. And here, it is obligatory on the part of company to make the payment of the preference capital even. And that is why we will deduct preference capital of rupees 3 lakhs from here. So, finally, now we are there with us capital employed of rupees 16 lakhs 44,000. Okay, now step number 2. Step number 2. What is our step number 2? Expected profit. How will you calculate? Expected profit is equal to capital employed into expected rate of return. So capital employed we have found out rupees 16,44,000 into expected rate of return is given in your sum at instruction number 6. It is 10%. So if we can multiply this, you will get the expected profit of rupees 1,64,400. Okay, that is how we are done with our step number 2, that is expected profit. Now the step number 3 is the average profit. Now see, you have been instructed in instruction number 5 that calculate on the basis of weighted average. So that is why we will take into consideration the weighted average profit. How many years you have been given? You have been provided the profit for last 3 years, that is 2017, 18, 18, 19 and 19, 20, and the profit is respectively 9 lakhs, 12 lakhs and 14 lakhs. Now what are the weights we will assign? 1, 2 and 3. The next step, profit multiplied by weights, you will get your weighted profit. So 9 lakhs into 1, you have got 9 lakhs over here. Then 12 lakhs into weight 2, you will get 24 lakhs. Then 14 lakhs into 3, you will get 42 lakhs. So this is how, if you can take the total of total and weighted profit, how much you are getting now? 75 lakhs over here. How will you calculate the weighted average profit? The formula is total weighted profit divided by total weights. So total weighted profit we have 75 lakhs that we have written over here, and the total of weights is 1 plus 2 plus 3, you are getting 6. So I have written it at the denominator. If you can solve this, you will get 12,50,000 as your weighted average profit. Now, very important, these are the 3 important adjustments for which you have not been intimated directly to go for such adjustment, but whenever such adjustments are there, you have to be very careful without missing. You don't have to forget these 3 adjustment. Number 1, that is interest on non-trading investment. Number 2, provision for taxation, and number 3, preference dividend. Now why we are taking this into consideration? We are calculating goodwill, for which we would be considering all the things which are related only to your business, that is only trading activities. Then how can we consider or how can we include the interest which you have earned from your non-trading investment? Yes, and that is why what we will do, we will deduct interest on non-trading investment. Then you have provision for tax. Yes, it is obligatory on the part of every individual, over here individual companies all assesses that to pay their dues of tax on time, and the last obligation is the payment of preference dividend. And these are the three things which we have to take into consideration while calculating our average profit. So we have now with us the weighted average profit of 12,50,000. We will take it with us ahead. Okay. So we have 12,50,000 with us. Interest on non-trading investment. Where are you getting these investments from? Just have a look at the asset side of your balance sheet. You have been given 15% debentures of Bansi Limited face value rupees 1 lakh. So 1 lakh into 15%, how much interest you are getting? 15,000, which we are going to deduct. 12,50,000 minus 15,000 if you can do, you will get the 12,35,000 as your profit. From here, we will deduct the provision for tax at the rate of 50%, and that is 6,17,500. Now you have the profit after tax, from which you would be deducting the preference dividend. So 3 lakhs into, now from where you will get the amount of preference dividend? If you can have the look at your balance sheet liability side, you have been given 12% preference share capital of rupees 3 lakhs. So 3 lakhs into 12%, how much dividend you are getting? You are supposed to pay 36,000. So now, after making the payment to all the obligations, now you have left with average profit, and that too of rupees 5,81,500. Now let us go to step number 4, that is super profit. Super profit, it is very simple. Super profit is equal to average profit minus expected profit. Average profit we have calculated at 5,81,500 and expected profit is 1,64,400. Yes. Now if you can deduct this, you are getting the super profit of rupees 4,17,100. Now the last step is, that is calculation of goodwill. Now it has been given to us at the beginning itself that the calculation of goodwill by which particular method? Super profit method, and that we have found over here. So goodwill is equal to super profit into number of years of purchase. Here it has been instructed to us to go for 3 years of purchase. So 4,17,100 into 3, how much goodwill you would be getting? You are getting the goodwill of rupees 12,51,300, and that is how we are completing with our sum over here.